Hi guys, this is Hector. Today is the 7th of June 2007. It's 10 past 10 here in Europe in the morning, and I want to show you just one quick example of how it's always important to zoom out into the longer time frames before taking a trade, because well, you might get a surprise, okay? And you don't really know why your position is reversing, and well, then you zoom out into the daily chart or even the weekly chart, and then you find out. In this case, I'm looking into the Canadian dollar against the Swiss franc, okay, in the 4 hours time frame. Let me zoom out a little bit. There you are. Again, as you can see, it's beautiful uptrend, okay, as per my system, as per the three simple moving averages, right? All of them pointing up, parallel to each other, etc., etc. Price nowhere near the 100, etc., etc. Anyway, yesterday we had a nice swing down, okay, a retracement back into the sorry, this week I meant, this is a 4 hours time frame. All right, last week we had the nice swing up. Then the first 2 days of this week, Monday and Tuesday, we saw a retracement back to levels of former resistance, now support, okay. Also the 50% Fibonacci, the 114.50 round number. Let's zoom in a little bit more for a clearer view, guys. And well, yesterday we broke to the upside. We formed a W formation, right? A W formation right of the dynamic area of support. This is one of the formations I talk about in my website, okay? Double bottom right of an area of support, and we've just broken the W formation the middle peak, okay, the middle rally, however you call that, and we've just made a new high, okay. We've just pipped above above the previous day's high, okay. That, according to my system, would trigger a long entry, okay. It would be a valid long entry from a technical point of view, all right. And that W formation, I forgot to mention, that's empowered, okay, strengthened by the breakout of the retracement trend line, okay. A few factors coming together to make this you know, a valid long opportunity with a breakout, a pullback, and a continuation. The pullback is signified by that red bar down there. You see that red bar, guys? Okay, so we had the reversal formation of the dynamic area of support, few factors coming together. All right, we break the trend line, breakout, pullback with that red bar, and continuation. We've just made new high. That will be a valid long entry. So why haven't I taken it? Because if you go to the weekly chart and you zoom out a little bit, have a look at that. Let's clean up the charts a little bit. Have a look at that. Right there, right there. We've just bounced off last year's high, okay, in February 2006, about a year ago, more or less, a year and 3 months, 4 months. You see that? Last week we touched to the peep that level, and from there we've seen the retracement, okay, that I was mentioning before about the 2 days. The two first days of this week, Monday and Thursday and Tuesday, we've been retracing back down, okay, to our current area of support. Well, look at where we found resistance, okay. It's the previous the 2006 high for the year, all right. And now we found resistance again. You don't want to go long in here. In my opinion, the way I tried, in my opinion, trading is all about buying support, selling resistance. If you go long here, you will be buying resistance. Resistance, a massive resistance. This is the weekly chart, guys. Okay, this is the high for the year. Okay, this is a very, 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 very strong resistance. Okay, and not only that, I mean, the, it's already been retested. Okay, this level it was already retested last week. Okay, and we already bounced down. You see that red bar in the weekly chart? Okay, so as far as I am concerned, this is not a safe long. Okay, I am not saying this thing is going down. Okay, I'm definitely not gonna look for any short. All I'm saying is that until this level, the 116 level, okay, is broken, okay, it would be, at least in my opinion, very unwise to search for any long entry. All right, it would be very, very unwise and very aggressive, and well, it's just not the kind of trading I do. All right. Once again, I repeat, I'm not saying this thing is going down. Okay, the trend, currently trend is definitely up, but I am indeed saying that there is a brick wall here, and well, it's going to take some effort to break this wall. Okay, if we are to continue to the upside, we are going to have some headaches around this area. Okay, we are already seeing a retracement. Okay, we are already seeing the first red bar in the weekly chart for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks in a row we've seen green bars. Okay, we've seen an up momentum actually since the very beginning of this trend in March 2007, and now we're seeing the first red bar right off the previous year's high. All right. You don't, like I said, you don't want to go long now here. You want to stay sidelined. Okay, you want to remain out of the market, or at least I want to remain out of the market until this level is broken. Okay, and well, once this level is broken, I will resume looking for long entries on this currency pair. But for the time being, I'm just staying out of the market. All right. Okay, guys, that was all just to just to show you that it's always important to zoom out in time and see what's going on in the daily, in the weekly charts, because sometimes, like I say, if imagine we enter long here and for some reason price retrace all the way down here and you don't even know why, and well, this is why. All right, so it's always good to zoom out the charts before entering a trade. Okay. Alright, guys, that was all. Bye bye.